Hi, welcome to my video on an introduction to SAE records, kind of a 101 on record keeping, kind of the basics. First thing we want to talk about in this video is why even keep records, like what's up with that, why is it even important? Second thing is we want to go through some examples and hopefully that'll lead us into terms, common terms that are connected to keeping records. So in this video, again, introduction to SAE records, kind of a 101, why keep records? All right, so our objectives are, as I mentioned, why keep records, why is it important, basic financial definitions, and common record book entries. Also, the important areas I have for you, terms, are identified in green letters. Now, first of all, why keep records? Well, according to the U.S. Department of Ag, that's to manage the financial, marketing, production, resources, and legal risks that have to do with an agribusiness. The idea is that record keeping is a tool to help in making decisions. So according to the USDA, record keeping covers all the way from production of planting and growing and managing an agribusiness all the way through marketing it to your customers. The idea of record keeping crosses all of these areas. Now, record keeping, according to an online journal, is just an essential tool. Better analysis for better decision making. North Carolina's Cooperative Extension puts out lots of resources, and they identify the key to becoming successful is being a good producer and a good financial manager. Even nonprofit organizations, so according to the Center for Nonprofit Excellence, they must keep records to document their receipts and their expenditures. Farm Credit, and this is a lender, so an ag lender identifies that good record keeping can have substantial impact on profitability. Now, profitability means you make extra money. Extra money is what allows you to pay back your loans and keep going and grow your business. So they even go into further details. Tracking cash in and cash out is basic. That's what we're going to focus on in this video. But as you bring money in or as you send money out, you've got to calculate the results of that. And that is the idea of record keeping. You also can talk about changes in values over time to help you better manage your business. So why keep records? There's lots of reasons why, and we want to focus on now how to keep records. So when we talk about records, there's two targets for records. In other words, we keep them for two reasons, or we get information from two areas. That is project-based records. That's like your SAE project, but it could also be FFA and classroom. And then finally, personal records. So there's really two types of records that we keep, or targets for them. So when you keep a record, you're thinking, is this a project kind of record or is this a personal kind of record? And over time, personal records may be the first thing you do, and then project records are where you go after that. Or if you have successful projects, maybe you take some of that money out and it's for personal use. So the idea of there's two targets for records is a project or a personal record. Now, as we move into record keeping, there's really two types of records that we keep. So every time something happens, we're either tracking time, the money and the hours you invested, or we're going to be tracking money that you've invested or you've taken out, so in or out. All right, now as far as keeping records, for example, may help us here. So on time, I spent 2 hours at the local food bank collecting donations on 1/1 of 2000 and whatever, or I spent 2 hours working in my project on that date. So the idea of time is that really you're talking about hours. Money relates to on 1/1 of 20, I spent $45 on supplies for my project. So that's a project record, not personal as far as money goes. But there's two examples of time and then also money as an example. Okay, so let's start talking about time records. Time is sometimes referred to as a journal. So it includes things like a specific activity like community service time, FFA time, or your SAE project time. It includes the details like the date, the description of the activity, or even photos. And then finally it includes the time itself, hour or 15 minutes, 30 minutes, whatever that represents. A time record is an important part of record keeping. And again, that's your journal is where you do that. Now, what we're going to really get into is the financial records. Financial records really depends on your project. Projects could really vary, and the kind of financial records will vary as well. Learning about financial management is kind of one of the goals of keeping records on your project. But really, when we talk about records, again, they could be divided into money in or money out. And that's the way we're going to look at the money part of the transactions. So if we're going to start talking about money, then what is money? Well, economists identify that it's something used as a medium of exchange, meaning that when you pull money out of your wallet, you're swapping it for something. So if you go to buy a Coke and the Coke is $1, then you're saying it's worth $1 because you gave them $1 for the Coke. So therefore, that's the transaction. Also the same is not personal though, it's project-based. So when I buy a new show animal, if it's worth $400 and I pull my wallet out and give them $400 for that, then that's going to be what the project now is worth because I spent that on it. So when we talk about money, there's opening your wallet and pouring it out, and we talk about that as a cash term. So when we measure money, first measure is cash. I opened my wallet out and swapped it for whatever I wanted to buy. Or there's also a non-cash type transaction, and that's really a business transaction that's made, but cash is not used. So for example, if I were to go and say I had a hay business where I raise hay, and I have a livestock project where I actually raise livestock. Well, some of my hay I might not just sell. Of course, I sell to people. That's how I make money. But I also take my hay and put it into my livestock project. So that means that you need to recognize in your hay project that you did sell hay. You just sold it to yourself. So that's like a trade. Barter may be sometimes the idea of that you work for someone else, and instead of opening your wallet and buying a bag of feed, you work 4 hours for somebody, and in exchange for that you got $50 worth of feed. So that would be a barter for the items that you need. So there's two types of measures of money. It's cash. I opened my wallet out and paid for it and I got the item, or I did some kind of a trade or a barter. And that's the two transactions that we talk about involving money, cash and non-cash. And both of these need to be measured so that we can truly see the picture of whatever project we're working on. Okay, so in this record of money, what are the terms that ought to be talked about right up front? First is income. So income is when you have an entrepreneurship project and you get money in for the items that you sold or you traded to someone. Now, sometimes we get money in, but it comes from a paycheck. So when paychecks happen, money comes into us in exchange for our work. And then finally, the idea of money going out would be an expense in exchange for items I need in my SAE project. So expenses are going to be these short-term items that you got in to use in your project. And that would be an example of money out. Now, there's another way money goes out, and sometimes it even comes back in. So it does both, and that's the record of a non-current item. Now, non-current is not like an expense. So if you buy feed or you buy medication, those things are going to be used or consumed. So those are expenses. Non-current items, a long-term item that you buy. Now, when you buy this long-term item, at the time of purchase, it's long-term and it's high cost. So the examples of this would be like a breeding-aged animal. When you buy this breeding-aged animal, a bull or a cow, those are purchased to use for several years in your project, which is going to try to produce offspring. But these long-term items are breeding animals, tractors, trailers, buildings, land. And these non-current items that you buy, you could buy a new one, which means you had to put money out to go get it, or you could sell them later on. Now, you don't buy them to sell, but you could sell them, and that would mean you get money in. So also when we talk about a record of money, it could just finally be personal. So personal means you got money in like a gift, or you took money out like buying a video game. And these money in and money out are the last types of records for money. So these are some of the common terms, but they really all start to lead us to the concept of an exchange. So every time money's transacted, there's this swap I've talked about. Like I opened my wallet out and went and got a $400 show animal. So I opened my wallet, gave them $400, they gave me the animal back. There's always this exchange process. It really is identifying there's always an opposite entry that tracks this. And the opposite entry, this concept, is called double entry. Every time a record is made, there's always an offsetting entry that helps track the records. In fact, it makes sure that the records are accurate. And so some examples may help. So number one, I buy a new show animal. Let's say it's a $400 show pig. I gave money out. In exchange for that, I got a show pig back, and that's the double entry that needs to be made. And your record book in AET actually only ask you one side of the entry and how it happened, and it handles the double entry. For example, let's keep going. I buy feed for my new show animal. Let's say it's $30. So again, I had a $400 animal from one. That's what I have now in my possession. I gave $400 for him. I also went and gave money out, $30 for feed, so now I have a $430 animal. Finally, I'm done raising my animal, and I simply go to sell my animal, and I'm going to get money now in. So I had a $430 animal. If I sell that animal for $630, then that's $200 of extra money, and that's still balanced out because that's going to be called profit in our records. So we're going to take the $430 animal, we're going to send him out. The money that comes back in, $430 of it is to pay for what we sold. The extra $200 is booked or identified in the records as profit. And your records, as you keep the records, those transactions are what we see in reports in the management parts of the AET record book. So continue with examples. I might get money in, but it's not from anything I sold. It's because I worked and I got money in from a paycheck. So that would be straight profit or income right away for every paycheck you get. So for example, in my previous examples, I sold my show animal and got an extra $200 back. In this case, I went to my job and earned a $300 check. So the $300 that comes in is straight profit because I used my time to get that money. What about a gift? So my family gave me $500, so I have the $500. The offsetting entry is a personal gift. So the personal part of the record book would recognize, well, that's a gift, and that's how you got the $500 in. So again, offsetting every time. Finally, you use some of the personal money or use some of your money to buy a video game, which would be a money out entry that represents that you lost the money because you didn't lose it, but it went away from your records and it recognized as a personal expense. So there's the offsetting entry there. Okay, so in summary, record keeping is a very valuable skill identified by USDA, higher education, farm credit, all the way even counting towards nonprofit entities. Records are really based on two things, time or money, and those are the two records you must enter. And then every record comes in and out, and it measures what we call the exchange or double entry. The AET system helps you by getting you to focus on what part of the transaction can you identify, and then AET handles what's called the double entry record to make sure your records are always in balance and are financially sound. That way you can then use that to make better business decisions. This is also a measure of the educational value. Making decisions and using the information is really where the educational value exists. And tracking personal money in and out can kind of separate where the growth came from. And your goal is to measure the financial growth for your SAE decisions. The personal money in or out is really just trying to show how you may have gained those resources. So hopefully this video teaches you a little bit about the value of record keeping, some of the key terms that are used, and then finally hopefully seeing a little bit of the value of making better decisions so you can grow your SAE experience and continue to grow as you move into a career in ag and related areas. Thanks.